Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, May 17th, 2019. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll see here is that price has pulled back quite a bit, quite a deep pullback from this recent rally. This is something we've been talking about over the last couple of days, that this has been a really good bounce here, but at the same time, this wasn't a super strong low. We continue to remain in a down move, and also we are retesting levels from below between 2,800 and 2,900, which again, bears are looking to defend and look to push lower here. So this is an important zone here. It's the first major pullback in the last 3 days, and this 2850 is going to be very important here. It's a retest back at this LVN and the previous month's low price, that previous month's low. So coming back to that price after pushing through it here, bulls would want to keep it bid. If they can't, that's what's going to open up a little bit more weakness. So 2850 here is going to be important for the early session right now. But overall, this is an important range, 2960 to 2800. We may see further development within that key range for a while, even getting below it, trapping and going higher. So this key range right here is one to mark and keep on the books. All right, let's take a look now at the NQ. You'll notice with the NQ you get very similar price action here, with the key range, the impulse move that has dropped and back to the midpoint. That one is marked right there. ES is not just yet. We have pushed back above this previous month's low. So ideally, if price were to return to this zone, bulls would try to keep it bid for a continuation higher. Based off the key range here, again, price could get down below this low here and become a trap opportunity for a push higher. So this is going to be the key range to watch. We could certainly continue to develop within that range before anything happens. Given the recent trend here, this impulse sell-off tends to create the boundaries for further market participation. All right, let's take a look here at crude oil. All right, here's crude oil. Now this one has gone back and forth here. Obviously a very tight range. Then it tried to break higher and failed. That was a big time sell signal with perfect absorption here and digestion the second day, and then it closed above. That was the signal there that we were likely going to take out this high, and we've seen it play out here over the last day or two. And anytime you close into this tail here, it's no longer rejection, it is now acceptance and been auctioned back through, and that can suggest even more upside ahead. So we're right back at the point here that is meaningful for crude oil, at least in this time frame, and that's the previous month's close, that blue dotted line. And with all of these market participants below it for the first 2 weeks, it's indicative that we could see a squeeze for the next 2 weeks. And if the low is in for the month at 60.04, then we could be looking at a squeeze all the way back up to between the 66.59 and 68.78 zone. That's your 100% target. That's your 75% target of average range over the last 10 months. From this low, that takes you into that zone. So again, 2 weeks sideways with the potential to see 1 to 2 weeks of expansion. Again, this is all if price can get above 64s and hold. That previous month's close, basically. Get through that and hold, then the upside is open. Fail there, and again, we just come back and retest the lows with a shot to release to the downside. All right, let's take a look at gold. Right now, gold is seeing another failure here. We talked about 1293s being the key pivot to watch yesterday. Right at 1293, it was very reminiscent of what we've seen here, what we've seen here, what we've seen back here, or even up there, where price has just recently rallied. It's now holding, and then the stops come out and a big sell-off day occurs. And we've seen it over and over and over again recently in this downtrend. And 1293 was the key breakout point. It was the point that had been resistance. It was the breakout point here. It was support. So that's the level where the stops will likely come out. And price dropped pretty nicely right back to where we thought it would. It's right back to the previous month's close. Again, another previous month's close becoming very important this month. And at the moment, I mean, we have a downtrending market. We've come back away from this level. It may be open to come back to the lows here. If for some reason we start to break through 1305s, that opens up quite a bit more upside. We just have not been able to see that type of behavior here lately. So it's going to be interesting to see 1280. Is this a rejection where 1280 becomes higher support and we go higher, or try to? Or are we just going to push through 1280 and keep on going down within this downtrend? So right now, trying to decipher that, but we have time, because after a big high range day, you tend to see a low range compression day. So today could be a fade the edges type of session for gold. All right, that is it for now. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.